Hello, welcome to our monthly performance monitor. My name is Barney Hawkins, Investment Director at True Potential. Just when we'd got used to the idea that global growth would inevitably mean higher interest rates, the markets have paused for thought. In the UK, a slowdown in the economy meant that May's expected rise in interest rates, considered a near certainty in March, didn't happen. In the Eurozone, a similar drop in output was witnessed. Japan, too, slowed unexpectedly, and emerging markets were sideswiped by the threat of higher interest rates in the US, a slowdown in China, and a good old-fashioned economic collapse in Venezuela and Argentina. Only in the US was there a positive surprise. However, even here, the market's reaction was muted, with analysts either discounting the figures or exercising caution over how long they could be sustained without the one-off boost from the recent tax cuts. So where does that leave us now? Well, for the most part, the global growth story remains intact. Central banks may have exercised caution in not raising rates this time, but the direction of travel remains unaltered. Opinions differ on whether the Bank of England will hike in August or November, or both, but there remains little doubt that rates will rise at some point later this year. In the US, the bumper reporting season has partially vindicated some extravagant ratings, particularly among the tech giants, but there's a feeling that while the pace of growth may be slowing, it is to an easy canter from an unsustainable gallop. America's fortunes are inextricably linked to those of the global economy and vice versa, so barring a global slowdown, the US remains attractive, albeit with a currency viewed as susceptible to weakness in the face of growing trade and budget deficits. In Europe, a degree of caution has crept in around Italy. Italy is a net contributor to the EU, but because of the unlikely coalition between the right-wing League movement and the populist Five Star Party, the country now has Europe's first Eurosceptic government. By contrast, in spite of a slight tremor in some of its economic numbers, Japan is continuing to benefit from buoyant conditions, and we remain positive. The UK still divides opinion. Valuations are attractive, lower than Europe and certainly the US. Sterling, too, is regarded as an undervalued currency. However, the fog of Brexit hangs heavy over the UK, with much of the investment community awaiting greater clarity around the terms of departure before committing. Among investors, there's undoubtedly a sense that we are late in the cycle. After almost a decade of economic growth and rising markets, how could we not be? The tax cuts introduced in the United States appear to have had an immediate effect on corporate earnings, but there's likely to be something of an aftertaste as interest rates are raised to cool an economy already running hot. And this will be felt around the world. But much depends not on the magnitude of these effects, but the pace at which they occur. The markets can cope with change, but don't like surprises. Now, while we're undoubtedly in the autumn of this particular cycle, the recovery has been shallow and faltering. There's no sense of euphoria, almost none of relief. However, it's precisely this caution, this restraint, that's reassuring, and with global growth still very much on track, interest rates around the world remaining low, tax rates hardly punitive, and inflation under control, this economic autumn is likely to witness a prolonged Indian summer. Thanks for listening, and we'll see you again next month.
Okay, so welcome to today's review of the True Potential portfolios. My name is Chris Leyland, and I'm an investment director here at True Potential. So the format for today is I'm going to spend the next few minutes talking about our flagship investment product, that is the True Potential portfolio range. So first, let's start by discussing the performance of the portfolios. We'll then look at what are the key themes that we're seeing from our fund manager partners, and finally discuss what changes have been made over the month, particularly in respect of a new addition to our fund lineup. That is a True Potential fund in partnership with HSBC and Bank of Montreal. Okay, so starting off with performance, the month of May has been actually a very strong one, with all portfolios showing positive returns, and that's building on the excellent numbers that we saw in April. Over the period, investors have been rewarded for taking risk, with the higher risk portfolios with their larger weightings towards equities outperforming the lower risk models. If we look over the longer term, the track record is excellent, with investors seeing returns of over 40% since launch for the more aggressive portfolios. So looking at markets themselves, equity markets have been the main drivers of return over the month, with the UK leading the way in local currency terms, benefiting from a devaluation in sterling for those large global earners such as HSBC, Shell. Within bond markets, the low risk areas of the market produce the best returns, with UK gilts benefiting from UK interest rates being kept at 0.5%. Currency has been a key feature within investment return, as sterling devalued around just over 3% against the US dollar. This has been a real benefit for investors, with their non-UK holdings now more valuable. Okay, so let's move on to the performance of the underlying funds that make up the portfolios. And the True Potential Close Brothers fund range has shown some excellent returns, with their stock picking ability and their growth style really shining through. The True Potential SCI fund range was also strong, with their style diversification and value bias working well over the month. The portfolio's overweight position to both Close Brothers and SCI has been rewarded for May. Moving on to markets themselves and looking at the key themes that we see after speaking to our investment partners, the general view is one of a constructive growth picture, with market participants adjusting their expectations to a higher interest rate environment. Opinions differ as to whether the Bank of England will raise rates in August or later in the year, but a rate rise is now clearly on the cards. The US is still seen as leading the way globally, and recent earnings figures have been incredible, buoyed by Donald Trump's tax cuts. The question for investors now, though, is how sustainable is this? Okay, so let's move on. And as you know, True Potential never sits still, and we always look to innovate. We're incredibly proud to announce the launch of our new True Potential Growth Aligned Fund Range, a new fund range managed by the team behind the True Potential portfolios in partnership with HSBC and Bank of Montreal. The fund is low cost, accessing both active and passive investment styles, with a groundbreaking fee construction aligning clients' interests with True Potential. Over the month, we've added the new fund range into the baseline portfolios of defensive, cautious, balanced, growth, and aggressive. More will be added to the new fund range at the end of June, and this will mean approximately a drop in the fees on the True Potential baseline portfolios of around 4 basis points, offering you a better value product with even more style diversification. Okay, so that is everything from me. Thank you very much for listening, and I will see you next time. Thank you.